Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Let me grab the bias chart. I'm going to do that and see view 100%. There we go. Let's go over and let's start with the euro dollar. So the euro basically has just come back and it's retesting, backfilling maybe a little bit here. I thought it wouldn't. I didn't actually think it was going to get all the way up to 120.30 or 110.30. Excuse me. I thought it was only going to get back to 110.20. As you can read here, last night in my forex wrap, the euro dollar should have good resistance from 110.10 to 110.20. It overshot it a little bit. I mean, we got a brief spike high on an hourly chart, up to the 30 level, but overall, I'm really not expecting. I didn't really expect a whole lot of backfilling. Excuse me. Yes. Am I paused? Dang it. Sorry. Thanks, Kip. All right, appreciate it. Thanks for pointing that out. Dang, man, sometimes I forget I pause the stupid thing. Appreciate that. So anyway, the euro popped back up, and like I was saying here in the FX wrap last night, I wrote last night that we should get to about 110.20. I didn't think we were going to get all the way up here to 110.30, but we spiked up there, and we're just backfilling a little bit. Now, as far as the euro goes, it's obviously very, very choppy, very, very rough waters that we're dealing with. And my longer term take on the euro dollar is, as long as we're below 112, it's bearish. Okay, now we can backfill still even today ahead of the FOMC, and what could happen, in my opinion, here, let's grab this really quick. Okay, let's grab that. Just removing some of these lines just to simplify our chart a little. What could happen is we could, continue to stab higher up towards 111. I think that's going to be a pretty tall order for where we're currently at 110. But, today, maybe 110.60. It's possible that we get up there. I actually feel that we might have already peaked in the euro for the day, but it's possible because we got so much data coming out today. If you guys don't know, we got like Case-Shiller House Price Index, Flash Services PMI, Consumer Confidence, New Home Sales, Richmond Manufacturing Fed. So all that stuff is coming out, which could impact the dollar. Currency traders are starved for U.S. data today. We are, everybody's, looking for something to trade on, to trade off of, since we didn't have any data yesterday. So even though all the data is all second tier stuff, it could really, still move the market. Okay. Now support is going to be this low here at 109.50, and then below that is 109.10. So, just also keep in mind we're stair-stepping lower. It's not really following any trend lines, but we are making lower highs and lower lows. So, we could potentially break 109.50. All right. So we have 1.0950 as being support. Okay, it's not great support, but it is support. Okay, it's just minor. We might breach into brief new lows too, as we are making lower highs and lower lows. It's just very choppy, very choppy waters. Okay, so right now it is still bearish. The euro is still bearish. It's just not pretty moves by any stretch of the means. If the euro pushes below 109.50 and it looks like it's stalling, I'd probably just end up covering down there, because I don't necessarily know I want to hold dollar longs going into the FOMC this week, which is on the Thursday, tomorrow, excuse me, on Wednesday. I'm glad I checked, but I'll probably end up getting out of my dollar longs ahead of them. The only dollar long that I may hold, frankly, is the cable. Let's go ahead and take a look at the cable. All right, here's the pound. Um, so the pound, as I mentioned a little bit earlier, we had an inverted head and shoulder pattern, right? Last week, I was playing it to the long side. I bought it twice last week, sold it for 60 pips here, 80 pips there, like twice. I bought it, playing inside of the shoulder. We are we've knocked out the symmetry, and I've got to assume there's still traders on the long side of this cable, okay? And I'm gonna make a pretty bold statement here that if we break through this 103.50, 130.50, excuse me, we're gonna trip a whole lot of stops, downside stops too. Like it's gonna be not a pretty move. It's a bearish wedge that's developing. Like I said, if I'm gonna hold any dollar longs going into tomorrow's FOMC, it's probably gonna be the cable short. Everything else, I'm kind of, kind of waffling around. I don't know if I want too much dollar exposure, but the cable, we stay below this blue line right here. Really don't have any problem with it. Okay, so resistance right now is 132. That's key resistance, by the way. Support is 130.50. That is really key support, and it's bearish. All right. Let's take a look at the U.S. dollar Swiss franc. Now, the U.S. dollar Swiss franc rallied pretty aggressively this morning. I mean, we were sliding, and you can see it. We ramped up pretty aggressively. Now that's obviously Swiss National Bank activity. Look at the Euro Swiss. So you can see there was some action with the Swiss National Bank. The thing about the Swissy is I've been bearish on the Swissy just because of this. It was the tweezer top that we had here. We just kept creating some really long wicks, and then today, here we are rallying right up towards those highs. I'm going to tell you guys, if this thing breaks 99.10, I have 99.05, but I'll write 99.05. If we break that, that's going to be extremely bullish for the dollar Swiss. Okay. We're in a range right now, but man, that thing's threatening to break out. All right. Support. See, we made brief new lows, and then all of a sudden we just spiked into new highs, which that's not good if you're short, because if you break new lows like that, and then you spike you spike up. If you break highs, it's going to be a pretty good breakout because they got a lot of people short down here. Okay. So that means that today's lows at 98.35 are important. So I think yesterday we wrote 98.40. So that means today's lows are really now very important. Okay, let's go over to the dollar yen. So the dollar yen, massive slide, and I'm obviously a little irritated that I got out of my yen trades so early. Whoops, I didn't mean to do that. I closed out of my dollar yen, well, not my dollar yen, my Aussie, New Zealand, Canadian yen trades when we were right here yesterday. We were at 105.90, 105.90, like we were like 105.95 or 105.93, and I closed out everything thinking, yeah, that's good. Made some profits there, and then several hours later we just crap the bed. Obviously, trying to initiate new shorts in the dollar yen doesn't make any sense to me right now. But if we rally back to 105.40, that would be a pretty awesome Greek god singing type of event. Whoa, dollar yen rallied back to 105.40. It looks like a great short. Whoa. That's how the Greek gods sound when, they give you a good setup. And that if we got up there to 105.40, that would be a really, really nice event. That was a really sad. Oh, dollar yen got up to 105.40 and a good show. All right, I tried. Anyway, we are in a range environment. George says Zeus just had a heart attack. All right. So we're going to have to write down support today being right here. See this 50% retracement? It's right there. This comes in at 103, basically 103.90. Okay, 103.90 is going to be really critical support. Anybody who's bullish does not want to see that break. Okay, because I mean, look, I'm not trading the yen right now. I have no yen exposure. If I was buying the dollar yen, I'd buy it and put stops below here. Okay, definitely, and so that means that if we break that, we're going to probably see a pretty aggressive move lower in the dollar yen. Okay, so like I said, I'd rather not chase it down here. I'd rather just kind of short a rally up towards 105.20, 105.40, but yeah, there we are. Okay, let's go over to the Canadian. So, wow, I just saw crude. Crude just hit new trend lows. Crude looks so bearish, guys. I can't even. I know I tweeted that out today. U6. I tweeted that chart. Well, we're at the 50% retracement right now, right here. This is the September contracts. We have to stop. I mean, we don't have to stop. I mean, we're not even that oversold. I mean, you look at like the daily RSI, we're not even near oversold conditions. So, but man, this crude oil just continues to get blasted. Just continues to get blasted here. And if that continues to go lower, that means this dollar Canadian is going to continue to rally. I am long the dollar Canadian, happily. My cost average is 131.47. I've owned it since Friday afternoon. I bought it Friday afternoon. Once we were at the breakout point right here, I have not added to it. I did add to my Euro Canadian longs yesterday. I added to this one. My cost average is 144.74, and this is on fire. And this Euro Canadian looks like it has so much further to go. So for those of you that are like selling, the dollar Canadian because you're like, it can't go up anymore, be careful doing that. I mean, we're about ready to scale yesterday's highs, and yesterday's highs are at 132.41. Next resistance comes in at 133.15, and that is a horizontal resistance, 38% retracement, 161% extension. Horizontal resistance, 38% retracement on a weekly basis, monthly or weekly and daily basis. Look, I think we're going to 133.10, maybe even as early as today. Okay. I'm going to make the assumption we break above 132.40. It is bullish. Here, let me get rid of these blue. I'm going to have to redraw that, but let's get rid of that. Let me get rid of this. All right. So support now. Where's support? So any dip down to 131.50, you got to view that as a buying opportunity now. That would take me back to break even, but I mean, that'll be support. That's if we can even get down there, right? Which is a big if. All right, let's take a look at the Kiwi. So like I said, the Kiwi rallied. We had this, we had a couple hammers here, a few of them. Hammer, hammer, hammer. We finally broke above that 70.15. And this is predominantly due to the move in the yen. I mean, the yen moved so aggressively. Let's do this. The yen moved so aggressively that the Kiwi had to respond. All right. So now here we are. In my opinion, we're at the sell zone again. Now I'm short the Kiwi. I haven't added it, but we're right back into the sell zone, in my opinion. Okay. Now we filled the gap. That's done. Previous support, current resistance, previous support, current resistance. 38% retracement comes in at 70.90. If you have an opportunity to sell the Kiwi dollar at 70.90 today, that's where I add, people. That's where I add. And I've got a small Kiwi short, but I do not mind adding to that bad boy at all. 70 to 90, 70, 90. Should be key resistance today. Sorry. I didn't mean to yawn on you guys. Support today, support will be back down at 70.15. All right. Let's see if we can do the Australian dollar really fast. Get that one out of the way. Grab some coffee. Coffee. Good coffee. All right. So tea is the most the most popular drink in the world is tea. I don't understand why more people globally don't drink more coffee. I don't get it. But that's personal taste preference too. Where when I was all my Greek relatives can't figure out why the hell I like to put hot sauce on everything. I literally put hot sauce almost on everything I eat. Like, I enjoy, spicy food, and so I mean, every culture is obviously different. But man, I love coffee. I have to admit. All right, let me see where are we at. Oh, Aussie. Okay, let's go over to the Aussie. So the Aussie has bounced too. You know, again, the reason why the Aussie is bouncing, and you know what? To redraw this, let's remove that for a second. Actually, you know what? We got to keep that. That was the 618 there, right? Um, we're in the apex of this stupid triangle, which is just brutal. I mean, it's brutal because it's. I mean, if you look at it, we're smack dab in the middle. It's hard to get too directional with the Aussie. You know, here. I would think that any move up to here is probably not a bad area to be on the short side of the Aussie. 75.55. Support 74.50. It's just range bound. And all right, when I come back, we will continue on with the analysis. Thanks everybody for being here. Don't go anywhere. I'll see you back here in about 5 minutes or so. I'm gonna go grab some more coffee because I love coffee. Be right back. Hey guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. So we need to finish up with our analysis here. So we're going to go over to the dollar index, and you know, the dollar index has pulled back to a breakout point, and that's going to be pretty critical support in my opinion. It's going to be down here at 96. I was like 96.80 for a while, and this 96. What was the spike low here? 96.73, so basically 96.75. That should be support. 6.75 should be support for the dollar index. Now, the dollar index has slipped back below, you know, this. We did this breakout. We were approaching the 161% extension. I still think that that's a valid target for dollar longs at this point, which will come up at 97.75. Okay, but you know, as long as we stay above this blue line, this red line right here, it's bullish, and as long as the dollar continues to grind up there, it's fine. 97.75 will be resistance. 97.75, and I believe the dollar is attempting to break higher. Okay, let's go over to the U.S. dollar Mexican peso. So the U.S. dollar Mexican peso had a really great day yesterday. I mean, it rallied sharply, and so it rallied a lot. You know, I haven't been playing the peso this last, I want to say, week and a half. I haven't really had a good read on it, but you know, it's okay. You know, it's okay to look at a currency pair and go, you know, I just don't know what to do with it. The U.S. dollar Mexican peso fits that bill for me. I have not been, you know, I haven't been able to figure out exactly what's been happening with the peso. All right, and right now, oops, let's grab that. Okay. Right now we're at a 50% retracement of that spike high all the way to almost 100% recovery. We're at a 50% retracement right now. The 618 comes up at 18, well, the spike highs here are 1894. So this will all be really good resistance if we continue to break higher. So that'll be 1894. And I think we're in a range. Support is going to be back at 1870. Okay, that's support. All right, let's take a look at the Swedish krona, or the Norwegian krona. Actually, we'll do that first. Here's the Norwegian krona, and you know, we have this Garley pattern, excuse me, and so that resistance should be at 80.60. I think we wrote that same thing down yesterday, 80.60.50 or 8.60.50. Okay, support. It's right here. We're not really, you know, we're not really moving a lot. We're just kind of grinding higher, but 8.52. Range. Now let's talk about the Swedish krona. I do own the Swedish krona. My cost average at 8.64. I'm positive a little bit, not by much, but this thing came right down to the breakout point here. So 861.50 is big support. And we've got to keep an eye on the Swedish krona because this thing, if you guys haven't seen it, I mean, we're coming up towards really big resistance. I mean, if you look at a weekly chart, now you start doing some calculations on this, which I really don't see as possible, but you know, it's still something that we should be aware of. Now, this is a big flag pattern, right? This is a weekly chart, right? I mean, if it plays out, which would be, I mean, pretty amazing. That means the exchange rate of the U.S. dollar Swedish krona would go up to 10.50 from 8.50. I mean, that's like a 25% decline from current levels of the Swedish krona. I don't personally, I don't see it. You know, like I can't envision that happening, but that doesn't mean it can't happen, right? That doesn't mean it can't. So, you know, just because I, you know, feel that way doesn't mean, you know, it can't happen that way. So we have to watch this thing carefully as we move up towards this trendline resistance. Now, obviously, today's resistance is going to be 867.50. It's not great resistance. It's just the 786, 8.6750. But we got to keep our eye on the Swedish krona. We can turn from range to very bullish in fairly short order. Okay. All right. Sorry, just had to stretch. Okay. Your bias chart's done. Let me go ahead and take some questions. So,